It's been an ongoing battle between California homeowners and insurance companies. Many policy rates are skyrocketing or just flat out being canceled. And now Allstate just got the green light to raise its home insurance rates by an average of 34%. So this will affect about 350,000 California residents. It is the largest increase of any major insurer in the past 3 years. The company says homeowners will see the increase on their bill after November 7th. And even more hikes could be coming as State Farm, California's largest insurer, is also asking regulators to approve a 30% hike for its policyholders. Kenny Choi spoke to some frustrated homeowners.
Glenn Starkey still puts in the work to minimize any risks that home insurance companies may frown upon.
I play ball with them.
He's never submitted a claim for any of his properties in his lifetime. His rates with State Farm have remained steady, with minimal increases along the way.
I wouldn't suffer as much as some of the other people that have been dropped and don't have the income.
Starkey is in a low fire risk neighborhood in San Rafael, but other homeowners living farther north in parts of Santa Rosa feel they're being burned.
Because of the fires around here, they say my home is in the fire zone, so they added $1,200 to it. So now instead of $900, it's $2,100. How do I pay that?
State Farm Insurance, California's largest, is requesting a 30% rate increase for its homeowners line, a 52% rate increase for renters, and a 36% rate increase for condominium owners. State regulators previously approved for a 20% hike for homeowners and condominium owners' policies last December. Garrett Gu works for a State Farm Insurance branch, explaining how previous hikes have impacted clients differently.
It's not necessarily across the board. If you're in a higher risk area, you may see a higher percentage.
Frustrated residents say needed home improvement projects may be put on hold if rates increase again. Many say it's insurance greed driving the rate hikes, but did not want to speak on camera, fearing they'll be dropped by bringing more attention to their insurance policies.
The main problem is that homeowners insurance has not been profitable for some time in California.
David Russell is a professor of insurance and finance at Cal State University Northridge. He says rising labor and material costs and other factors are to blame.
Because inflation and climate change are driving loss costs higher, the insurance industry is chasing a higher number.
Massive losses and claims from catastrophic wildfires have taken a toll on the bottom line for insurance companies. They say state regulators are not approving needed rate hikes quickly enough, forcing them to stop writing policies. But homeowners say the California Department of Insurance isn't standing up for them.
The insurance commissioner, Commissioner Lara, is trying to balance the interests of insurers to maintain availability in the marketplace while also trying to avoid, though it may be unavoidable, rate shock for consumers.
Dozens of homeowners we spoke to express varying levels of frustration, while some say they understand the situation.
A lot of the families are not as lucky as I am.
The fear of rate hikes has made Glenn Starkey ultra careful to maintain his properties and minimize any risks. It's the only thing he can control in this new insurance marketplace.
California has seen an average of more than 7,000 wildfires each year, consuming an average of more than 2 million acres over the past several years. That is according to data from the governor's office.